The market doesn't break the people who make the mistakes. The market breaks the people who rush. And one important point, this video is about logic and sequence, not promises. You are the watching how the situation is read, and you take the principle for yourself. Trade is coming to the close. Lost seconds. And closes in profit. Plus $5. And closing in profit. Another $1. And closes in profit again. Total for the sleeves plus $1. Hey, I'm Ravi Kumar. I know how it goes. You are staring at the chart. You want to get in faster. It feels like the move will leave without you, and your hand just wants to click the button. I went through the same thing back in the office days in Bangalore. Rushing always felt like strength until you started destroying the result. In trading, it's exactly the same. The market doesn't break the people who make the mistakes. The market breaks the people who rush. So today I will show a maximum practical example, a short series of trades on the 1 minute time frame using a simple combo, candles plus level plus RSI. No fantasies, no guessing games, only what you can actually see on the chart. We will do it right on the Olymp trade on a candlestick chart. And one important point, this video is about logic and sequence, not promises. You are the watching how the situation is read, and you take the principle for yourself. If you like this format, clear, practical and explained, subscribe, hit like and check my Telegram, link in the description. I share checklists, a journal template and breakdown to make your trading calmer and consistent. Let's get to the screen. Alright, we are on the Olymp trade platform. We are using candlestick because on the 1 minute chart, candles give you the most honest info, who is pushing right now and where the pullback is starting. First step, I choose the asset, I open the instrument list and pick New Zealand dollar and USD. We see 93% payout. That's strong because on short trades, the math of the whole series depends directly on the payout. Next, I set the time frame to 1 minute. The 1 minute chart is discipline test. You either wait for the confirmation or you get dragged into the gambling mode. There is no room for making stuff up and you read the reaction. Now I add our extra filler RSI 14. Indicators RSI period 14. Done. I don't use RSI as a click signal. I use it as a context, overbought, oversold and the strength of the impulse. Now let's start trade. Trade number 1. First trade is $50. Look at the price. It reaches a local resistance area, and the key thing, upward movement starts slowing down. Candles aren't pushing as confidently as they were a minute ago, and then we get something that matters a lot, a resistance and upper wick. An upper wick is buyers trying to push higher, but price doesn't hold. Sellers push back. Usually it means one thing, buyers are losing control and the chance of pullback down increases. At the same time, I check RSI. It supports the idea because it's in a zone where the upward impulse looks overheated. Important, I'm not treating one exact number like a religion. I'm reading the condition, overheating, fatigue in the move. So the condition match. Local resistance plus slowdown plus upper wick, RSI supports weakening momentum. That's why I entered down with $50. Now discipline. On the 1 minute chart, people change their mind every 10 seconds. What if it flips back? I don't do that. The entry was logic based, so I let the trade finish. Trade is coming to the close. Lost seconds and closes in profit plus $46.5. Next, I follow the series approach, but I keep the main rule in mind. Increasing size only makes sense when you are staying in control and not chiming it into a race. Here we are showing the sequence and why the entries were exactly there. Trade number 2. I increase the amount to $70 and again I trade off the price reaction. Price pushes up again and comes into the local high area and the picture repeats, actually even cleaner. Smaller candle body and upper wick appears. Classic combo, the upper move is tired, buyers can't push through and selling pressure shows up against the top. The market is basically saying higher, not right now. And RSI is in these spots often doesn't keep rising with the same confidence, which helps confirm the impulse is losing strength. Again, not a magic button, just a layer of confirmation that there is no fresh acceleration upward. So I entered down with $70. The trade runs, price behaves logically, no aggressive new push-up, the move feels heavy. Trade is nearing the end and closing in profit, another $65.1. Nice. Now it's important to not to get cocky. 2 wins in a row isn't a reason to lose your head. It's a reason to keep doing the same thing. Watch facts, not emotion. Trade number 3. Next, I increase the amount to $100. And here the job changes. After a sequence of moves, and confirmed reaction, the market often shifts into a phase where the impulse can keep going by inertia. That's why I'm using now. I'm watching this after the impulse. Price isn't making deep, sharp pullbacks. Candles look confident, no crazy spikes, and no flipping every second. That matters. When the market is truly ready to continue, it doesn't look nervous, it looks composed. In this scenario, RSI usually shows the move still has strength. It doesn't drop hard, it holds its structure. Basically, it doesn't fall apart, it supports trend-like behavior. That's another argument that the market isn't reversing, it's continuing. So my logic is, impulse are very starty, continuation by inertia, candles are confident, pullbacks are shallow. I enter up with $100. So let's see. Trade is coming to an end. I watch the loss candles, no sharp reversal, structure stay intact, and close it in profit again. Result plus $93. Total for the sleeve plus $4 to $4.6. And here is the key point. This wasn't I always guessing right. It was I was until the market shows signs. Candle level, speed, wicks, that's the market language. RSI 14 is just one more layer of the context that helps you avoid jumping in when you are trading on nerves. Remember this line, it genuinely changes how you trade. The market doesn't respect the people who always win, it respects the people who can take a hit and stay clear-headed. Real strength in trading isn't risk and it's not bold bets. Strength is knowing when to stop, think and take the right step, even when you really want just one more trade. Trade with intention, stay calm, and remember, consistency will always beat adrenaline. If you want, I will drop my quick 1-minute checklist in Telegram. Level, candle, reaction, RSI confirmation, entry review. Subscribe, hit like, and I will see you in the next screencast.